Hey there, this is Alex Kluge, and I'm here from Toronto Home Experts, and I'm here to dive into the February 2022 Toronto real estate market update. Now, before I dive into the numbers, I just want to kind of go over just a few things. As we know, when we're looking at these real estate numbers, we're comparing them to the year before, so February 2021. It does give us a little bit of an indication of what's happening in the market relative to where we were last year, but it doesn't actually tell us exactly what's happening in the market today. So I'm going to give you a few stats that will shed some light a little bit in terms of what's happening and how that in fact impacts you if you're buying or selling real estate in Toronto. So before I start, these numbers, as I just said, is a snapshot in time. So that's February 2022. So it doesn't really take into account some of the changes that we're seeing in the market right now. So we're recording this as early March, and we just saw our first rate increase. So the Bank of Canada raised the overnight lending rate by 25 basis points, which therefore increases the Bank of Canada Prime, and the variable rate mortgage holders right now are paying 25 basis points higher for their mortgage interest. So this is the first of possibly 3 or 4 variable rate increases that we're going to see this year. Only time will tell. It's a really crazy time that we're in right now. Obviously, there's the Russia invasion of Ukraine, which is terrible. My heart goes out to all the citizens of Ukraine and what they're having to go through right now. It's awful, and I hope this conflict ends soon. But because of this invasion by Russia, we've now seen a huge spike in oil prices. So that's obviously having an impact on everyone globally. If you're going to fill up your car, you're seeing prices that we've really never seen in terms of the cost. So that's affecting a lot of consumers, and ultimately it trickles down to what's happening with real estate as well. We have higher interest rates, higher oil prices, global economic uncertainty because of what's happening. So that's perhaps affecting the Toronto real estate market a little bit. I mean, it's hard to say exactly to what extent all of this will impact. I mean, because it's really just the beginning. But seriously, when we're thinking about it, higher mortgage rates, higher oil is definitely going to have an impact on Toronto real estate, whether we like it or not. So when we're looking at some of these numbers, I just want to actually point out that it is still very much a seller's market. So I use this analogy today, which I think is a great analogy, if I do say so myself. The real estate market, if we were talking in early February, it was like you're driving 150 kilometers an hour on the highway. So it's very, very fast. And the market was very much tilted towards sellers. The market is still a seller's market, but instead of driving 150 kilometers an hour on the highway, you might be driving 125 kilometers an hour on the highway. So the market is still a seller's market. It is shifting a little bit. We don't know the impact. Like, we don't know how this is all going to translate. I do expect this to be a good real estate year for sales volume. Not as good as we were 2021. I did say that in my predictions video, and certainly we couldn't, forecast what's happening economically around the globe, but also too when it comes to oil prices and the conflict right now with Russia and Ukraine. So, but anyways, so just diving into these numbers just a little bit. First, when we look at sales volume, we're looking at volumes that are down, roughly 16% from we were last year, 2021. So when someone's looking at these numbers, they're saying, wow, sales volume is down 16%. But actually, if you remember, 2021 was a record year when it comes to sales volume for the month of February. And 2022 is the number 2 February on record for sales volume. So we had an unbelievable amount of sales for 2021 in February. So 9,000 is still an excellent month volumes wise. So really, when you're looking at that, you have to take that with a little bit of a grain of salt. So when the media outlets are suggesting that there's no inventory, um, it's really not. I mean, there's 9,000 sales. It's not like there's not enough inventory to satisfy those sales numbers. But I think it's really a buyer demand issue. So there's excess buyer demand, which is affecting the sales volume that we're seeing. So typically, February is not as buoyant when it comes to these types of sales figures, and I think buyers are expecting rate increases to come in. So a lot of buyers are jumping the gun, trying to lock in at lower rates. That's my theory. So when we look at active listings, when we compare it to last year, we're down 20%. So that's a pretty big number. But again, taking in the context of what was going on in early 2021 last year, this number is not entirely surprising. But what actually I find a little bit more surprising is when we're jumping into the new listings number. So when we compare, we're only down 6.6%. So when you look at the sales to new listings ratio. So that is when you're comparing new listings and the percentage of sales relative to those new listings, and you're seeing a larger gap in between the sales and new listings ratio relative to where we were even the month prior, which is what happened. You'd expect prices to price appreciation to be a little bit more muted, but that's not actually happening. We saw, and we're going to get into the average price increase shortly. So we saw sales to new listings ratio decrease from January 2022 to February 2022, where we saw a substantial increase in price. So now we're looking at price. What happened from last year to this year, in one calendar year, we're up 27%, which is, again, this is average price. It does not mean that your house or condo or townhouse has gone up by 27%, but this is an average price for the Greater Toronto Real Estate Board. But what's actually more interesting is when I was talking about the sales to new listings ratio, we appreciated from January 31 or February 1 to January 28, the average price increase for the Toronto Real Estate Board was 7.4% for 1 month. So that goes to show you just how active and buoyant this real estate market is for the month of February. And if we compare to what happened in January, so January 1 to January 31, the average Toronto Real Estate Board price increased by 7.3%. So that's like 14.7% in 2 months. So is this sustainable? Absolutely not. There's no way this is going to sustain. So what I think we're going to see a little bit of a plateau, and certainly not the same level of appreciation we've seen first 2 months. And some media outlets perhaps are suggesting that there may be a price decline. I certainly think that's possible. I mean, really, if you think about it, if average prices go down 10%, where would we be? We would be at prices. So if prices went down in March this year, 10%, we'd be at like the second week of January average price numbers. So it's not that crazy to think that this might actually happen. So again, I'm not forecasting a price decline. I'm certainly not suggesting any of those things might happen, but if they do, contextually, like that's kind of what we're comparing with. Just given the fervor that this market has appreciated over the last 2 months, it wouldn't be entirely surprising to see, a little bit of a plateau. So anecdotally, what are we seeing that's happening in the market? In terms of the last couple of weeks of February, or even the last week of February, early March, we are seeing that there are more listings on the market, so there's more competition. We're seeing the 416, the Toronto proper, is actually a little bit better insulated, in my opinion, in terms of what's happening market-wise relative to the 905. Like I've noticed a number of listings in Markham and Richmond Hill that had offer nights and did not take offers. So again, this is just anecdotes for the last 10 to 14 days. Is this going to continue? I don't think so, but certainly I think we're going to see a little bit of a plateau, and maybe there might be a little bit of a disconnect between what buyers are willing to pay and what sellers are willing to pay. But this will be super interesting to track over the next few months. So make sure you stay tuned and you watch these videos because we'll be tracking these numbers really, really closely. Okay, so home price index. So this is a comparison to where we were from the year before. So this compares the HPI for all these different regions within Toronto Real Estate Board. So Halton, Peel, York, and Durham. So these are some like absolutely insane numbers. I mean, really, like we can't expect this to going forward. Like it'd be impossible to suggest that prices are going to go up again, 35% Halton. Like that's unprecedented and certainly not something that I think is realistic. But, when you look at by asset class, so like how do you compare condos to townhouses, semis, and detached? If you watch my market update or my market predictions video for this year, I did say the condo market was going to outpace the freehold market, and I still feel that's going to be the case. I certainly have noticed in downtown condos the activity is really, really hot, and there's plenty of showings, many offers on offer night. Very, very competitive market. Certainly a lot more competitive than the market was, even a year ago. For the downtown condos. So, but that goes to say that the detached and the semi and the townhouse market is also really active, certainly in the lower price point. It's certainly more active, certainly right now. So days on market, unsurprisingly, like when we compare it to a lot of these numbers that we're talking about, we're down 37.75%. So it's not surprising that we're down to 9 days, which is really, really low. I don't expect there to be a 9-day on market for next month, because 9 days average days on market is truly unheard of. So when we're talking about 14, that's essentially very, very low. But when we're looking at 9 days on market is as I said, unprecedented levels. So again, months of inventory, we are at 0.9%, which is the lowest February on record, unsurprisingly. Like, actually, if anything, I think I might have said in February 2021 that the 1.5 was the lowest February on record for months of inventory. So not surprising that we're seeing that again, given the context of what we're seeing with price appreciation and sales absorption, like we just talked about. Okay, so this concludes our video for this month. I hope you really liked it. Please make sure you smash that like button. Feel free to subscribe. Get these amazing videos that we produce on a regular basis, diving into the market. And if you have questions on how this impacts you as a buyer or seller, be sure to reach out to any of our social channels. We'd be happy to answer any questions you may have, how this affects you in the market today. Thanks again for tuning in, and we'll see you next month. Bye for now.